From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 26, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and we're going to highlight some of the key levels that we will be looking for entry and exit opportunities. It is very important to remember that this is holiday trading. Holiday trading mode continues throughout this week with lower liquidities and potentially unexpected movement. Caution should be extended throughout the holiday period with your trading. And most important, to use appropriate risk management strategies in all trade setups. As we get started here on the USD CHF, the dollar franc, we're looking at the daily time frame. We can see over the past couple of weeks, we've seen the market going in both directions, a little bit of a fall inside the black box, top right-hand corner of the chart. A little bit of a fall back down into the 98.50, 98.35 orange shaded area at the bottom. Late last week, we began a rise here back above the 99 level, and now we're just pressuring just above 99 right now, the purple shaded area in the middle of the black box. As long as it stays within and above that purple zone, we would expect support there and the potential to continue the direction the market's going in, which would be a rise back to the blue shaded area in the top of our range or black box here. During holiday trading mode, I would suspect we don't see a whole lot out of this other than just bouncing around between the purple and the blue shaded area. Take it down to the 4-hour time frame, and as we get down here, you can see just the lack of movement here over the past few days, of course, as expected. Sitting above the 98.95, 98.80 purple shaded area, again, is support. So as long as it stays within and above it, there is no real reason to go short above that purple shaded area. If anything, you may look for another run towards the blue shaded area this week as the market just kind of drifts in that direction. The only real risk here is that the market changes its mind, pushes back underneath 98.80 and begins pressuring back towards the bottom of the range. So purple zone will be important for this week. Above it, we drift back to the blue zone. Below it, may drift back down towards the orange zone, but watching for this purple zone to be our main decision zone this week for the dollar franc. Moving over to the euro dollar, we've been talking about of course, the larger range, the blue box here, the highest high and the lowest low, and the market kind of been inside there for quite a long time, all the way back to July of this past year, in July of 2017. The center portion of that bigger blue box, you see these smaller black boxes, and you can see for much of 2017, or since July at least, we've been contained in there. There was one period above it, one period below it, but the rest of the time it was inside here. So nothing really new here for the euro as well. We zoom it in, the purple zone, that is 118.85, 118.60. Obviously 4 days finding resistance there. As long as it's below it, that of course is resistance, and a very difficult place to go long for the euro dollar. You wouldn't want to go long underneath that orange or purple shaded area. The only real reason you would go long is that it breaks above 118.85. Then maybe it increases your confidence of a turn back into the 119s. Underneath it, maybe drifts back down to the green zone, at least for the day today. That looks like the most likely scenario, back down towards the 1825, 1995 level. We'll just put an arrow down there as well. That's your support. Not too hard to see that right here. And only reason to expect it to go lower would be that it breaks underneath there. 100 period moving average sitting inside the middle of that black box, green shaded area as well. And of course the blue zone at the bottom is your current support. 4-hour time frame won't really change it. The only real thing that you look at on the 4-hour time frame is if you have any inclination to trade this week during the holiday period, you're looking at the purple zone today as your resistance. Maybe a sell there, targets the green zone, but definitely expecting support as it reaches into the green zone for the euro dollar. Moving on over to the GBP USD, we've been studying this falling channel. Look at this, 1, 2, 3, 4, 5, 6 days just hovering underneath that blue shaded area. So clearly that is our resistance right there. Look at that, 5 days sitting, or for 6 days really, sitting underneath that blue shaded area, purple or pink shaded area, is your support. The only reason to expect it to go lower would be that it breaks through that pink zone. That's 133.15. And then, of course, we'll look for the bottom of the channel down towards the blue trend line would be the green zone, 132.40. So I don't think buying it right now is a very good idea as long as it's inside that channel. The only real reason to buy or go long would be that it breaks above the blue zone, 134. Then you look for it to begin changing the pattern. The falling channel begins to change into a rising trend if it gets above the blue zone. Let's take it down to the 4-hour time frame. Not too hard to see. It's been just toying around with this blue zone. If you've sold the blue zone at all over the past few days, you've seen profit. Protect that profit. Again, your risk here is that it breaks back above the blue zone if you decide to take the short into the blue zone. Not too far away now into the pink zone would be support. If you have any inclination to go long here, the pink zone would be your very best opportunity. Just know that if it breaks the pink zone, which it hasn't done in quite a long time, we could see a significant fall off for the GBP this week. Take it over to the USD CAD range. We've been in a range for a while now. Look at the black box on the chart. Blue zone at the top. That's close to the 129 level. 128.75, 129.10 is the blue zone. The yellow zone at the bottom, 127, 126.70. That's the support within the wider range. And we've just been bouncing around top to bottom for quite a while. When did it get in there? We're looking all the way back into October 25, so a couple of months now. We've just been bouncing around in here. Nothing really to break it out of this. We've had significant news for Canada and the US that hasn't broken it out of this range, so we need to take that into consideration. Zoom it in a little bit here and you can see the yellow zone. That's going to be your main area of focus probably this week for the dollar CAD, is that yellow shaded area. It's obviously support right now, so we don't want to sell on top of support. Selling on top of support never makes a good idea. We would want to sell on a break of that support underneath the yellow zone, which it hasn't done for quite a long time. Selling on a rally to resistance is a possibility, but at least right now, again, we're very close to the bottom of the range. I think selling may be kind of cautious here for the dollar CAD. Zoom it down to the 4-hour time frame. Really won't make a difference here for us. We know that the yellow zone support, you don't really want to sell into support, so that's a difficult place to do that, into the low 127. So don't really sell into support. Buying, there's no real reason to buy it other than the fact that it's at support. So definitely watching this one over the next few days for some clue of direction. Breakdown of the yellow zone goes lower. Support may make another run back into the mid to upper 127s, of course, above that green zone. If we can get back above it, which it tried to here, it couldn't. But if we can get back above the green zone, maybe that begins another run towards the top of our larger range for the dollar CAD. Moving over to the USD JPY, very interesting here. Of course, we've been studying different trends throughout the year of 2017. Blue trend, red trend, downtrend, black trend line, uptrend. We're more predominantly being bullish right now than we are bearish. Interesting area, the orange shaded area. We've studied this, the blue box on the far left-hand side of the chart, resistance, black box, support, and here we are sitting on top of 113.25, 113.05 as support. Look at this, 3 days now sitting on top of there. So obviously selling right now, not very good idea in the direction of the uptrend and sitting on top of support. Not a good idea to go short on top of 113. Maybe an opportunity to go long towards the yellow shaded area. The risk here is pretty clear. We don't want it to get under the zone if we decide to go long. If it does get under the orange zone, the black trend line, likely looking for the continuation lower back down to the purple zone at least, or lower. So trend is up, momentum is up, and we're sitting on top of support. I think that probably is the direction you want to focus your energies on right now for the dollar CAD, or sorry, dollar yen. Not too different here on the 4-hour time frame. And look at the lack of movement here. That's indicative of the holiday mode right now. So be very cautious. But if anything, if you're going to trade this, focus more on the long side than the short side. Looking at the AUD USD, we've seen a little bit of a change. The trend was down, black trend line, not too hard to see that. Over the past few weeks, we've seen a change of that where the market broke through the black trend line, went into a period of congestion between the orange and the blue zone, where the little black box is here, and the blue box back here. Again, you look at the blue box, you look at the black box, and the markets were ranging between the blue and the orange shaded area, both sides. Now we're above the blue zone. That's 76.90, 76.70. Resistance 77.25, 45. That's the green zone. See the blue circle over here? The blue circle shows resistance at the green zone. So we're right there right now. So don't buy it right now. That's not the best case scenario. Buying underneath the green zone is not a good idea. Let's zoom it in one more time. So when do you buy it? If you're going to buy the direction of the trend, the direction the market's going in, you would more likely either buy above the green zone, which clearly has a better target back to the yellow zone, or you buy on a dip back down to the blue zone. So it is either come back to the blue zone or above the green zone to go long. No real reason to go short right now on the AUD USD. So I think focusing long is still the priority. It's just a matter of coming back to the upper 76s for a new buy scenario into the blue zone, or breaking the green zone 77.45. Those are really only two reasons to go long. 4-hour time frame really won't change that. It just says you don't want to buy it right now. I mean, I think that's all that says, is don't buy it under the green zone. What about selling? You know, if we see some indication of selling pressure, you know, a larger bearish candle, let's say, up here at the top, then maybe that becomes an opportunity to go short. Some infusion of sell orders, some reason to go short, maybe even a shooting star candlestick, a small body with a long wick on top, would imply that there's a sudden infusion of sell orders. Maybe then it could become a short towards the blue zone. But right now, I just don't think that becomes a logical scenario for the Australian dollar. And lastly, moving to the NZD USD, look at this over here on the right hand side. Let's just go ahead and zoom it in on that. We've been stuck between the orange and the blue zone for several days now. Don't buy it right now. I think that's the easiest thing to say. Don't buy under the black trend line. Let me zoom out one more time so you can see that. There's your black trend line. There's the 100 period moving average. Don't buy right now underneath that, because that is implied resistance into that black trend line blue shaded area. And we don't have to imply it. 1, 2, 3, 4, 5, 6, 7, 8, 9 days now finding resistance underneath 7,025. Don't buy it right now. That's the easiest thing to say. If it breaks above that, of course, breaking even the blue shaded area, black trend line 100 period moving average, maybe that becomes a buy. Otherwise, back down here towards the orange shaded area would be your best scenario. A breakdown of the orange zone changes the strategy altogether. But don't buy underneath the blue zone. Buy a break of the blue zone above it or down at the orange zone. Selling into the blue zone, very similar to the Australian dollar. Only if we get some evidence of a sudden infusion of sell orders, a bearish engulfing candle, a shooting star candlestick, something, inverted hammer, whatever you want to call those, a small body with a long wick on the top, that would imply some bearish pressure. But right now, there's no real reason to expect the bears to come back in. So be cautious about selling it under the blue zone until we get evidence of a sudden infusion of sell orders. But most likely looking for eventually a potential return of the trend if the market continues to pressure through the blue shaded area for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.